I'm Jen, birthday Jen for now. I'm never taking these down. Thank you so much to my amazing best friend. Anyways, today's interview about real estate investing for beginners is with Amy from Marry Your Money. This is the second half. There are two parts. There's no specific order. All about the crazy, amazing tips and things that could go wrong, that did go wrong. Like, for example, she had bats after the inspector moved into her attic. How much does that cost? Let's find out, because she has that and so many more tips about how to very easily budget for these different things and make it happen. So if you're a first-time home buyer, especially for real estate investing, this video is for you. Keep watching, take notes, it's really good, and please subscribe, like this video, it helps us. And yeah, let's get into the interview.
So, hey, I'm Amy Watson. I currently live in Charleston, South Carolina, where I bought my first home. And I run a money blog called Marry Your Money because I completely changed my financial picture in the past 5 years. I went from being crazy in debt and having no idea what was going on with my finances to completely turning it around, saving all kinds of money, and then buying my first home. And so I thought I could share that information with other people.
Amazing. So can you tell me a little bit more about what inspired you to buy your first home? Were there any signs or reasons that you were like, this is the moment?
So I had been living in Washington, D.C. for about 8 years. And if you know anything about the real estate market in D.C., it's nearly impossible for a young person to break into that market. Home prices start at $500,000, and that's like a one-bedroom condo or a townhouse. And so it made it really difficult for me to even think about owning real estate. But then I made the leap to move to Charleston, which has a significant different socioeconomic status to the town. And real estate all of a sudden became maybe something I could actually own because prices were realistic. You know, you're talking about a single family home somewhere between $150,000 and $300,000, which felt a lot more doable and realistic for me. And so when we first moved to Charleston, my then boyfriend, now fiance, and we moved into an apartment to really get to know the area. But after about 6 months of living there, I just got this itch. I would look at Zillow every night sitting on the couch and I'm like, I can do this. Like, I could own a home. Like, this is crazy that I could afford this now. Cause like I said, living in DC, it never felt attainable. And I'd been saving and I'd been scraping and sacrificing and I'd been making more money in my jobs over time. And then the move really helped curb so much of our expenses and it freed up so much money that I finally had a down payment on a house that was a Charleston priced house, not a DC priced house. And so I started looking and I kind of went out and poked around and found the house that I bought in a couple weeks and put in an offer and they accepted it. And so I was on the pathway of buying my first home, like 6 months after I moved here.
Can you tell us a little bit more about funding and how long it took you?
Student loan from my graduate degree. And that had been a huge financial hurdle for me. It was just such a black hole and I had no idea how I was going to save money, having to pay so much money. I mean, essentially my graduate degree was a mortgage in and of itself with how much it ended up costing me in the end, because if you're unfamiliar with how graduate school loans work, they don't defer interest while you're in school. So you earn interest for those 2 years. So when I got out of school, I almost had double the amount I had taken out because of how high interest rates were. They were like 7%. Anyways, so I really was lost and didn't know what I was doing. I hadn't really ever been taught great budgeting skills or saving skills or really any great personal finance skills at all. And so I started making money out of grad school, but I wasn't saving anything because I just didn't have a handle on how to do that well. And so 2 years out of school, I'm still in the same amount of debt I was in. In fact, I had more debt because I had ended up abruptly losing my job and I ended up taking out a personal loan, which was so stupid to like cover my expenses at the time. And I was living in DC, which is incredibly expensive. My rent was crazy high. All my utilities were crazy high. And I decided this had to stop. Like the only way I was going to take control of my life was to take control of my money. And so I got really serious about it. I started a budget. I started accounting for every single penny in my life. I actually refinanced my student loan and I tripled my payment, which sounds insane, but I was so dedicated to paying that off as fast and as much as I could because I couldn't handle being indebted for like 30 years to that thing. I just couldn't do it. And so once I made those changes, it completely changed money for me, completely changed what I could do with money, what money could do for me. And that was when I started saving for a down payment. I started putting money away, even little money at first, $20 here, $10 there, didn't matter. And I would do side jobs. I started walking dogs. I drove for Uber. I started delivering for Postmates, anything I could find that would give me a couple extra dollars. And then all the extra money I was making from the side gig, I would put into my savings. And then after I had, I think, $8,000 saved, I started putting it in an investment account. And so I started having that money work for me, which I think is the key. If you have money and you want that money to help you work towards a goal, you have to have that money work for you. Now, a cautionary tale, and I'm not an investment banker, so I'm not giving investment advice, but investing is like gambling to a certain degree. And if you are saving for something, you don't want to lose everything that you've worked hard for. So it would be a really good idea to look into sort of safer structures like bonds or the S&P 500 index. And you could work with a financial planner, which I did. That's my other piece of advice, is I would hire a financial planner. They tend to be incredibly affordable. Most people don't think that, but usually all you do is you wind up paying the fees for them to manage your portfolio, which is really affordable. You're not paying them hundreds of dollars every month. You're paying them, a fraction of whatever you're saving. And so he really helped me get into the right portfolios that help my money make more money. And so I ended up almost doubling the amount of money that I had saved by investing it. And that helped me make a bigger stride towards my goal of getting my down payment. And then the second thing that I did was back when I was in my 20s, part of my retirement portfolio that I was offered at my first job was not only a 401k, but also a Roth IRA contribution. And that's something that you can use towards a first-time home purchase. So you're eligible to remove $10,000 from that account at no penalty for a first-time home purchase. So I was actually able to pull from that account and use that without a penalty for my home as well. And so I did a combination of funding streams, my savings, my investments, and the Roth IRA. And all of that contributed to not only my down payment, but also my closing costs. Most people forget, you put 10%, depending on what kind of loan you're eligible for down on your home. But then another 6% is in closing costs, which you need in cash. So both of those things. And then when we renovated our home, we put about another $30,000 into it. And so that's all my funding streams that I have.
So what percentage did you put down? Do you have a PMI? Any thoughts on that?
Yeah, so I did put down 5% initially. I did qualify for an FHA loan, your first time home buyer loan, which would have been 3.5%, but it comes with PMI required until you have 20% equity. Whereas if you go with a conventional loan, if you qualify for and can put down a conventional amount, which is usually 5% or 7%, then you have more options to remove PMI depending on, in my case, the lender that I went with was Rocket Mortgage, which is run by Quicken Loans. They had an option that if I had an on-time payment every single month for 18 months, I could have the option of dropping PMI off because I went with a conventional. So that's the reason I did qualify for a conventional, which not everybody will, but I did because I had a great credit score. And so I went with that option and I put down 5% instead of 3.5%. There's another option that you have at the beginning of any mortgage application. This was something I didn't understand. And so I think it's really great to share this information is you have something called points you can buy. And what points do is you can purchase basically a lower interest rate. So at the time when I purchased my home, the interest rates were 4.99%. That's what my original mortgage was. But I could have put more money down up front in buying points. And points vary in cost, but they would have been somewhere between $700 and $1,000 per point. And per point you buy reduces your interest by 0.25%. Again, depending on the lender, but that was what my lender was offering me. So I could have put down $2,000, $5,000, $7,000 extra and reduced my interest rate. And then usually what they'll do is they'll give you a calculation table that shows you where that break-even point is. And that's really important to understand about points and anything you're going to put down up front is because you want to understand, okay, maybe this is my first time home, but this isn't my forever home. So I'm going to try to leave this house in 5 years. if your break even point on those buying those points up front isn't before 5 years, then that's not a value to you. But if this is your forever home and you're like, I'm going to stay here for 20 years, then buying points up front is actually an incredible, affordable way to reduce the amount of interest that you're going to pay over the lifetime of the loan. So I think something really great to talk with your mortgage lender about is about point options available to you. Also considering conventional loans if you can qualify for them. And even though they have more down up front, that in general, you're going to mortgage less of the amount of your home. You're going to instantly have more equity in your house up front. And you're usually given more options about PMI with a conventional loan. So as of now, I've owned my home since October 2018, and I no longer have PMI on my house. And the way that you drop it off your house is by having at least 20% equity in your home. And I achieved that 2 ways. First off, the market here is insane. So my home has dramatically increased in value. It's almost gained $60,000 in value since I've owned it in 2 years, which is insane. But I also made improvements to the home. So like I told you, I put about $30,000 into the house. It has a brand new kitchen, a brand new powder room downstairs, all brand new flooring. I mean, basically everything. The whole thing was gutted and redone. So that has added significant value to the property as well. And so that helped the value of my house, which they do a loan to value ratio. And so the value went up and the loan number was low based on what I purchased it at and then how much I put down. And so because of those two numbers, when I refinanced my loan, and when you refinance, that's an opportunity for you to drop your interest rate. And they do an assessment on your house. So they appraise it, and my house appraised at a higher number because of both what we did to the house and because of the market. And then that number created a 20% ratio for me, in addition to what I've been paying on my mortgage. So I've reduced my mortgage over time. The value of my house went up. I added value to my home. And then when I refinanced it, I refinanced for 2.85%. Remember, I was at 5% basically before. So insane game changer for interest. But then it also allowed me to reduce PMI off my loan. And I dropped my overall payment by like $350 a month. All right. So I think that's an important thing about the team that you go with, right? So I think it's really important to have a good mortgage lender who can explain these things to you and ask all the questions. Don't be afraid to ask all the questions, because this is a legal transaction. When you go to purchase your mortgage, you are going to sign a booklet of paperwork, like a booklet of paperwork. So it's really important for you to understand what it is that you're signing, what it is that you're purchasing. And so if you don't understand something about the mortgage process, like points, I asked all the questions. And then shop around for interest rates. That's also a really important thing. Interest rates are not interest rates. Not every bank has access to the same interest rates, because not every bank has the same collateral, which is how interest rates get adjusted. So smaller, like credit unions, might have higher interest rates because they don't have quite the collateral that a larger banking entity would have. However, you also want to think about that, because I went with Rocket Mortgage, which is owned by Quicken Loans. And about 4 days after I closed on my mortgage, they sold my mortgage to somebody else. So now my mortgage lender is a different company. And that might not be a scenario that you're happy with. You might not want that happening. You might want it owned by the person that you run your mortgage through. And so those are all things to know about the process. If you go with a bigger entity, they're going to sell your mortgage off. And you might not be eligible for certain benefits depending on the company you go through. For instance, Rocket Mortgage offers conventional mortgage loans, but they don't offer build or remodel loans. So if I wanted to purchase a land and build a house on it, I could not have gotten my mortgage to them. And then I did want to renovate my house, and they couldn't extend me a renovation portion on top of my mortgage, which other mortgage companies may have done for me. But that's another thing to consider too. The type of home that you're buying and what you want to do to that home is all things to consider when you're shopping around for a mortgage. The reason I went with Rocket Mortgage, though, was because they had the best online experience that when I started looking around, I wanted to find out how much I qualified for, because I kept hearing, oh, you're going to want a pre-qualification letter. You're going to want to bring that with you so that you can show an owner that like you could buy their home. And so I thought, oh, I'll just go that was the first step. I'm looking at Zillow every night, and then I go, oh, I'll just get pre-qualified. And then I got pre-qualified and Rocket Mortgage online experience was so easy to do and to find out how much I qualified for. And they instantly gave me a direct person that I could talk to with a direct line. I wasn't going through a call center. And I felt like the experience was really positive. And they answered all my questions. And it was very easy to transmit information to them, showing my paycheck and showing banking information and tax information. It was really handy to use. And so I found the entire experience positive. And ultimately, I did shop around for other products after I was pre-approved to find if I could get better interest rates. But nobody could offer me as good of an interest rate as Rocket Mortgage. So that's why I went with them.
That's awesome. Thank you so much for that overview and helpful information. I'm learning so much, and it's so great.
Sure.
Yes. And then can you tell us a little bit more about the process? So while you were looking for homes, how many homes did you see? What was that like? Did you see some terrible ones?
There was one. I think my boyfriend would have broke up with me had I bought it because it needed so much work. I think he was really overwhelmed. But a little background on me. My dad was a tool salesman contractor. So I grew up doing projects. I'm very comfortable around power tools. I used to go and build homes for homeless and help people renovate all through my teens and my early 20s. I myself have renovated a number of things. And so I felt very confident in sort of seeing a diamond in a rough house and saying, oh, I could do something with this that I think other people would really, really scared by. So when I went out looking for homes, I told him that I was looking for a project house is what I called it. And I think he thought like, oh, paint the walls project house. And I was like, what can I demo and rip out project house? And so that was something we had to both come to terms on, because the truth is, even though I did this on my own, he was going to be living in the space. And so if I'm just going to completely demo a space, that's going to have to be something we agree on. And we have dogs. So how are they going to live in the space if we're totally renovating a space? So we set out to look for properties. And I first started with an area. We knew that there were various sort of, communities around town that we liked. And so I started looking for homes in those areas. Of course, usually the areas that you love are the expensive areas, the ones with all the great restaurants and the cute sidewalks with the potted plants that are taken care of. Those are expensive neighborhoods. And even though I had qualified for $350,000 to buy a house by myself, I knew that I didn't want to go to the top. And I think that's another great piece of advice and this is the piece of advice I give everybody who wants to buy a home. Whatever you qualify for, don't care about that number. You need to do your own budgeting, run your own numbers, and what is the amount you'd be willing to pay per month for your mortgage. Now, keep in mind, your mortgage also includes your monthly homeowner's insurance and your monthly property taxes. Those two things go into escrow. Your mortgage company actually holds them and pays for them for you, and that gets baked into your mortgage payment. And then if you don't put 20% down, you now have a PMI payment on top of that. And that becomes your monthly mortgage payment. So keep that in mind. You need to understand that that's what you're comfortable paying for. And then I always say, whatever that number is, reduce it by $25,000. Because let me tell you, the number one thing that happens to you when you buy a home is you have to fix something. And let me tell you that the starting price of everything you have to fix in your home is about $1,000. In fact, when we moved in, guess what we had? Bats.
What?
Yeah.
You had bats?
Yes, our attic had, not initially. So when we bought the home, you get an inspection, and there were no bats living here. But over the winter, they had moved in, apparently. And by the springtime, we just discovered that we had 128 bats living in her. And guess how much it costs to eradicate your bats? About $1,000.
No. How much?
So, $1,000. So let me tell you, as a homeowner, you will have to fix something. You will have a pest problem at some point, usually within the first 2 years. You will have an appliance you need to replace. And all of those things have a starting price of, no joke, about $1,000. And you know how quickly that adds up. And usually when you move in, you want to buy new furniture or paint the walls. So I always say, whatever that number is you're comfortable with, not that number that you qualify for, then reduce it by $25,000. Because that gives you about 25 times of those $1,000 moments that are going to happen to you that you now have baked into the dollar value that you are confident you can cover financially. And nobody should be house poor. That is a very scary thing to get into when you are a homeowner, is to be house poor. So that was another piece that I did intentionally, was I wanted to qualify for a home by myself because I instantly knew that I could afford it because I was sharing my space with another person. So I had that benefit, right? I'm not paying 100% of my mortgage. I essentially have a roommate. And so there's two of us paying towards the monthly purchase or the monthly mortgage. So I knew that I would instantly be able to afford that if I was whatever I qualified up to. But then I also significantly bought below that. So I qualified for up to 350. I purchased my house for 222,000. $125,000 gap I left on the table of what I qualified for. And I think that's a really important thing to do and to know about yourself, is just because you can doesn't mean you should. I think you need to think about how a home purchase goes into your other money goals. I had other money goals. My only money goal was not to own a home. It was to have a year's worth of savings in the bank. Guess what? I have a year's worth of savings in the bank. It was to be able to renovate this house. Guess what? I was able to renovate it. I wanted to be able to travel. I wanted to be able to do that. And I've always been able to do that. So I think it's important to think about your home purchase as a part of your other money goals as well. And I think just be as conservative as possible when you're searching for a home, and you'll always set yourself up in a good space.
I think that's so helpful and such good advice. And it's definitely something that I'm going through now as well. As I know I can qualify for this much, but I'm not going to be anywhere near that. That's totally crazy. It's always so high. And then you kind of mentioned this, but did you have any other surprises during your home inspection?
So nothing was a surprise during the inspection, thankfully. There's a very quirky thing about my house that my inspector had no idea why it was the way it was. And I actually had a follow-up electrician come, but all of my outlets, all these outlets on the wall, they were all installed upside down. In the entire house, all the outlets are like not the way you normally would put them. And the fact that we even think there's a right side up is the mistake, I guess, because I ended up getting an electrician out here after the inspection, and he was like, yeah, it's just an aesthetic thing, really. You can install them either way. But it really surprised the inspector. He said that he'd never been in a home that had all the outlets upside down. There was a number of things that the home needed maintenance-wise that I wrote into the offer. And so that's something that you're going to want to know when you work with your realtor, and you'll want a realtor who can help you kind of understand these things, is that there's a number of things you can write into the house offer that make you more appealing as a buyer, especially if there's a really competitive market. There might be things that you want to be willing to say that you're going to give or put on the table. There's also a number of things that you may want to write into the offer to protect yourself. And then there might be a number of things that you want to write into the offer that you want to make sure stay in the home. So for instance, one of the things that we wrote into the offer was all of the appliances staying in the home. There is an assumption that they stay, but that's not actually what you're purchasing, right? You're purchasing the home, and technically those things are considered furniture. So you could move into your house and all the appliances could have been gone if you don't write them into your offer. So that's something to keep in mind. One of the other things we wrote into the offer was all this maintenance work that needed to be done. There was a number of things, like there was a crack in the shower wall. So from a moisture barrier, water wicking standpoint, there was a problem there. The screen door on the screen porch was broken, and that's like a $150 door to replace. There's a gas fireplace in my house that was in non-working condition, so they had to call in a fireplace person to make it work again. The garbage disposal wasn't working. The microwave was broken. So a couple of things like that. And then they had all new carpet installed in the entire house and painted all of the walls. Those are things you can write into your offer. But you also can take things out of your offer that make you more appealing. So for instance, you could forego an inspection. You could say, I don't want an inspection on the house. That might make you more appealing as a buyer. Now, I considered doing that because I already knew I was going to renovate the house. So I thought no matter what an inspector finds, I could fit. I'm already planning on fixing things. I still went ahead with an inspection though, because it wasn't as competitive as the market in 2018 when I bought my home than it is now. I might put that in an offer now because it's a really challenging market. I'll tell you this also. Everyone thinks an inspection is foolproof, and it's absolutely under no circumstance foolproof. Perfect example is my house. I got the inspection. Inspector said everything looked great, signed off on everything. First week I took ownership of my house, I noticed that the toilet was wobbly in the powder room. I ended up calling a plumber out to look at it, and he goes, "Oh yeah, your toilet's been pumping sewage into the floor of your house for as long as this has been wobbly." Ended up having some flooring people come out because my home originally had Brazilian cherry hardwood in the house, and the entire floor in the powder room had been stained black. And that was all water damage. So when I started ripping the floor up, when I took the toilet out, I actually could rip the floor up with my bare hands. It was so rotted. And the subfloor had to be replaced in half my house. So over 50% of the subfloor had water damage and had to be replaced. But an inspector will never see that, because when you go into the crawl space where you could see underneath my house, it's all covered with insulation. An inspector's not going to rip your insulation out to see what your subfloor looks like. They're not going to touch anything. They're just going to go down there and look. Oh, it's all insulated. Great, it's all insulated. But that didn't show him how much water damage was underneath the floor. So inspections, I think people think they get really bothered by an inspection that either shows or doesn't show something that they end up finding later. And that's why I say give yourself that money buffer, because an inspection is not foolproof. They even tell this to you, but a lot of people don't believe this. When they get the inspection report, it says they won't take out insulation. They won't look behind walls. They don't, like, there are many things that they will miss because sometimes the problems in a house are behind the walls. They might not catch a pest infestation. They might not catch water damage. They may not catch shoddy electrical issues, because all those things might not be evident to them in the areas that they can see and test. So I think that's also something to be cautious of when you're going into buying a home. And that can be really scary, because that could feel like a blank check you might have to write. But again, I think that's why when you go into purchase a home, you should give yourself a tight financial budget, then give yourself a buffer for maintenance, and then know that your home will have a problem you need to fix, a pest you will have to eradicate, an appliance you'll have to replace, because that is homeownership. And so if you know those things up front, then they don't surprise you when they happen, and they don't throw you off your game when they happen. You say, you know what? Gosh, I knew that washer was going to go, and now I have to replace the washer because I knew I was going to have to replace an appliance. It was going to happen. So if you just set yourself up ahead of time, knowing that that's what homeownership is, unless you're buying brand new, that's a little different. Most people, though, don't buy brand new. Just then you'll go into it, I think, way more prepared. You'll have much less stress when those things happen because you were prepared for them.
Please remind us, where do we find and follow you?
So I have a personal finance blog. It's called Marry Your Money. You can find me at marryyourmoney.com. That's just like getting married, because I really think that your money should be a lifelong, forever commitment that you love and protect and respect and build a relationship with. That's the name. marryyourmoney.com. You can find me on Instagram at marry.your.money. I'm always happy to talk about anything budget or personal finance related. My focus is 30-something professional women, single or otherwise, who want to get out of debt and build a pathway to wealth.
Thank you so much for watching, and thank you, Amy, at marryyourmoney.com. Follow her, check her out. She is amazing, and I will also link a blog down below on my site, hometomakemoney.com, where you can see both videos side by side, all the information in one place. With that, click subscribe, click like. Thank you so much. It helps, and I will see you in the next video. Okay, bye. I am legit loving this red lipstick. I am gonna keep it, I think, on forever, and maybe I'll go to the grocery store with it. Who knows? Because that's the extent of where I go in Manhattan right now. Oh, I love it. Okay, but New York City is reopening soon. July 1st, a lot of things are gonna reopen, so I'll still be at home. Just kidding. I'll go out once in a while. I'm kidding, I do go out. I live in Manhattan. But it's different. It's definitely different. Okay, that's a whole nother video. I'm gonna cut that. That's way too much. Okay.